This call is now being recorded. So in the last class, I spoke about the topic, the income under the head capital gains, and I gave you some basic understanding about concepts related to what do you mean by capital asset, what do you mean by long-term capital asset, what do you mean by short-term capital asset, what do you mean by long-term capital gain, what do you mean by short-term capital gain, and what are the tax rates for long-term capital gain and short-term capital gain. So let's uh, uh, let's continue from where we were left with, and today we are continuing from the last point. So today, the at the outset, let me make you understand the cost of acquisition. The cost of acquisition. Before I go into what you mean by cost of acquisition, I told you this is a very important information which will be used for solving the problems. So the base year is 2001, 2002. You have to remember this. And the base year, the inflation points or index was 100 rupees, 100 points, sorry. And in the year 2019-20, this cost of inflation has increased from 100 to 109, 289. So महंगाई बोलते हैं ना, महंगाई 100 रुपीज से आज लगभग 290 हो गया है. Okay, so this particular table, whatever values are there will be used for solving the problem. So you can take a snapshot of it or you can Google search also. Okay, now first another concept which is required to be understood is cost of acquisition. So what do you mean by cost of acquisition? What do you mean by cost of acquisition? If you look in the slide, this one is the format that is going to be used, and here we have something called as cost of acquisition. Cost of acquisition. To find out long-term capital gain, or any gain or profit, the simple formula is selling price minus cost price. As you might have heard about this particular formula way back in your 6th class or 7th class. Selling price minus cost price is equal to profit or gain. In the same way, the same formula is used in the chapter income from capital gain, selling price minus cost price. So this is the selling price and this is the cost price. This is the cost price and this is the selling price. So selling price minus cost price will give you the gain. So the selling price will be given in the problem. We need not calculate. It is going to be given in the problem. And the selling price or the sale has taken place in the financial year 2019-20, because all our problems are related to the financial year 2019-20. But the most important point is this one, which is cost price. So cost price in terms of capital gains is called as cost of acquisition. आपने ये बिल्डिंग को कितना में अक्वायर किया था, ये आपने ये लैंड को कितने में अक्वायर किया था, ये शेयर्स को आपने कितने में अक्वायर किया था. So cost of acquisition, and what do you mean by indexed cost of acquisition? We have to understand it. In the same way, we have to understand cost of improvement and indexed cost of improvement. Indexed cost of improvement. So let's understand the concept cost of acquisition. That is nothing but the purchase price, and indexed cost of acquisition, and cost of improvement and indexed cost of improvement. So let's find out the definition for cost of acquisition. So this particular slide and this part is very, very important. This particular part of the discussion is very, very important, because many of the problems will be done on the basis of this particular concept, cost of acquisition for assets acquired on or before 1/4/2001. As I would already told, the indexation will start from 2001 2002, whose basic points are 100. Okay, so let's forget about this. Now come to the point, cost of acquisition. Very important. So what do you mean by cost of acquisition? Cost of acquisition is the purchase price. In normal terms, in crude way of explaining, cost of acquisition is nothing but the purchase price. Purchase price. It is nothing but the purchase price or the cost price or the cost price or the cost incurred for purchasing the asset or the cost incurred for acquiring the asset. Hope you have understood this point. Now, the cost incurred to acquire any asset by the assessee. Who is an assessee? The person who is selling the asset in the financial year is the assessee in our case. So the cost incurred to acquire any asset by the assessee is called as its cost of acquisition. It may be noted. Now we have to take a note of some important points, that the cost of acquisition includes deemed cost of acquisition where the asset was acquired by some other person other than the assessee, but was gradually passed on to the assessee. And in such a case, cost means cost incurred by the previous owner. So I will explain what this particular stuff means. It means that, for example, Mr. X is there. X has purchased this piece of land on, for example, 1/8/2001, 1/8/2001 for some 10 lakh rupees. Now, this he has gifted to his son, Mr. Y, on 1/9/2010. So now this guy has not purchased. Mr. Y has not purchased. So who has purchased it? Mr. X has purchased it, and he is transferring or gifting the house property or the land to Mr. Y. So the cost of acquisition of X is 10 lakh rupees. But whereas in case of Y, he has not acquired or purchased it, but he is getting as a gift from Mr. X. So in this case, the cost of acquisition in the hands of the person who is acquiring it and subsequent to selling Mr. Y is this 10 lakh rupees. So it's not like Mr. Y is acquiring it. Mr. X has already acquired it, and the acquisition price of 10 lakh rupees will become acquisition price in the hands of Mr. Y, who is subsequently selling this particular asset. So that is the meaning of the word, meaning of this particular sentence. It says that it is to be noted that the cost of acquisition includes deemed cost of acquisition where the asset was acquired by someone, some other person other than the assessee. In this case, assessee is Mr. Y, who is selling the land, but who has acquired previously? Mr. X has acquired it previously. So the cost of acquisition includes deemed cost of acquisition where the asset was acquired by some other person other than the assessee. So in the hands of the assessee, the value of this particular piece of land, which is cost of acquisition, is 10 lakh rupees. And in such a manner, cost means cost incurred by the previous owner. So whatever is the cost incurred by the previous owner. Now in this case, the previous owner is Mr. X. What is the cost incurred by Mr. X for acquiring this piece of land or building? 10 lakh rupees. So the cost of acquisition in the hands of Mr. Y is 10 lakh rupees, because Mr. Y has not purchased it. Mr. X has purchased it, who is called as a previous owner. Previous owner. Hope you have understood this point. Next one, next point. Next point is cost of acquisition. Now, cost of acquisition for assets acquired on or before, okay, before 1/4/2001. For example, if some asset is there, like land or building, is acquired on 1/8/1999. So this is a case where the asset has been acquired by the assessee or by the previous owner before this date. Now, why this date is very important? Because the indexation, for the purpose of indexation, we have cost of inflation index as 100. But whereas, do you have inflation index of the year 1999, 2000? No, it's not there. So that is the significance of this particular particular point. So again, I am telling you, please pay attention. The point is cost of acquisition for assets acquired on or before 1/4/2001. So, for example, 1/10/1998 is an example which asset is acquired before this date. Now, please remember from this date onwards, I told you, I showed you one table. From this table, we come to know that inflation index was measured from 2001, 2002, and henceforth, but not before. इसके पीछे नहीं था inflation index. So that's the reason it becomes very important to discuss this point. So here, so the asset is acquired before 1/4/2001. In such cases, what should be done? The cost of acquisition, the cost of acquisition, if it is done before 1/4/2001, what is the cost of acquisition? In such a case, if an asset is acquired before 1/4/2001, then you have two options to as far as cost of acquisition is concerned in the hands of the assessee. One is cost incurred for purchasing or fair market value on 1/4/2001, whichever is beneficial to the assessee. Whichever is beneficial to the assessee. Now, I will explain what is the meaning of this particular sentence. Cost incurred. For example, in this case, if a asset is purchased on 1/4/1998, for example, 2 lakh rupees asset, for asset, capital asset is building. Okay. Now, as the asset is purchased before 1/4/2001, in this case, it is before 1/4/2001, and the cost of acquisition by Mr. X is 2 lakh rupees. Then you have to use two formulas, two methods, two steps to find out the cost of acquisition in the hands of Mr. X. So what are those? The cost of acquisition for assets acquired on or 1/4/1999, on or before 1/4/1990, 2001. This is the method. It would be any one of the following. One is cost incurred. What is the cost incurred? 2 lakh rupees. 2 lakh rupees. What is the fair market value? This fair market value also will be given in the problem, and the fair market value of on this particular date, which is on 1/4/2001, will be given in the problem as far as this building is concerned. The see, 1998 में ये building का cost 2 lakhs था. So that is, this point you got the answer. But what about this? This will be given in the problem. The fair market value of this particular capital asset, which is building, will be given in the problem, and it will be, for example, I'm taking 3 lakh rupees. So the cost of acquisition is 2 lakhs or 3 lakhs, and whichever is beneficial. Now this is very important. Whichever is beneficial. Now, as the assessee, as an assessee, he wants to reduce his tax burden. Now, how can he reduce the tax burden? By increasing the value of the asset. By increasing the value of the asset purchased, or the cost of acquisition should be more, because cost अगर ज्यादा रहेगा तो प्रॉफिट कम रहेगा, और प्रॉफिट कम रहने से उसका टैक्स का लाइबिलिटी भी कम हो जाएगा. So among these two, whichever is beneficial means whichever is higher to my knowledge, to my understanding. So in this case, the cost of acquisition of the asset which has been acquired before 2001 should be the cost of acquisition incurred or the fair market value, and whichever is beneficial. So 2 lakhs and 3 lakhs. So to the assessee, this will be beneficial because the amount of cost has increased, and hence because of this, the capital gain will decrease surely, and the taxation, the tax liability as far as long-term capital gain tax will also reduce dramatically. So this is very, very important. This point is very, very important. Hope you have understood it. Next one. Now, sir, indexation. Certain cases where indexation is not allowed. Already I told about this. I will not go much into these details. Now, next one. So, capital gain on conversion of capital asset into stock in trade. Capital gain on conversion of capital asset into stock in trade. So what is this? Is a you'd say transfer which is taking place. That is what it means. For example, capital asset into stock in trade. For example, Mr. X is there. Mr. X is there. He's having 5 house properties, 5 house properties, or 10 house properties, or 15 house properties, and he's a very rich person. And now he wants to do the business of real estate. Real estate. Now, what he does is he converts these house buildings into business buildings. That is stock. So previously it was a capital asset. Now it has become a stock in trade. Stock in trade. So this is also a kind of a conversion which is taking place. So we will do some problems on this particular point. But for the time being, remember the discussion what we have just now discussed. Next one. This is the format which we are going to follow in solving the problem. Already I showed in the last class. So the first step is the selling price. So reduce from this. This is the first step of the format of computation of capital gains. The selling price or sales value less expenses incurred for sales. So you will get net sales. From that you deduct indexed cost of acquisition and indexed cost of improvement. So this indexed cost of improvement also I will explain to you the concept of indexed cost of improvement in the session today. So from this sales or net sales proceed, you reduce these two costs, and this cost, you will get the long-term capital gain or long-term capital loss. Now, steps to calculate indexed cost of acquisition. Steps to be followed for indexed cost of acquisition. So there are 2 steps which we have already discussed. So one is find out the type of asset on the basis of the period of holding. So what do you mean by period of holding? If it is less than 36 months, short-term capital asset. If it is more than 36 months old property, then it is a long-term capital asset. And if it is a long-term capital asset, then you have to apply cost of indexation. If it is a short-term capital asset, you should not apply indexed cost of acquisition. Now this is very important. You can note this formula, very important formula. So to find out the indexed cost of acquisition, the formula is cost of acquisition into CII. So I will call in short CII, cost of inflation index of the year of transfer by cost of inflation index in the year in which the asset was acquired, or CII of 2001, whichever is later बोले तो जो पीछे आता है. Okay, so cost of inflation index of the year of in which the asset was acquired, or CII of the year of 2001, 2002, which is the base year, whichever is later. So if I want, we will do a small problem and we will understand what do you mean by indexed cost of acquisition. So in this particular formula, you can by heart, you can remember. This is the basic formula which will be used 1,000 times in this particular chapter. Okay, so let's start. So for example, Mr. X has purchased a building for rupees 2 lakhs in 1999, in 1988-99. Okay, 1998-99, and sold in 2000. He has purchased a building for rupees 2 lakhs. Okay, in 1998-99, and sold it in 2019-20 for rupees 25 lakhs. Now, as this is now, please remember the number of years this particular asset was acquired and before it is sold, because we want to find out the holding period. The holding period is from 1999 to 2020. He has held to this asset, so it's more than 36 months. So it is a long-term capital asset. So for a long-term capital asset, we have to conduct or do or apply indexation. You have to apply indexation. So what is the formula for indexation? Cost of acquisition into cost CAI of the year in which it has been transferred, or CAI of the year in which the asset was acquired, or CAI for 2001 2002. Now, so cost of acquisition is 2 lakh rupees. Number one, hope you understood this. The year of transfer is the year in which it was transferred. Please remember, yesterday I told, whenever I use the word transfer, it means sale or sold. When is the year in which it has been sold? So it was sold in the year 2019, 2020. And now let's talk about, okay, I will, for the timing, I will change this one, okay? This is 2002, 2003. 2002, 2003 is the year of purchase. So 2002, 2003 is the year of purchase. So let's calculate index cost of acquisition, because this is a long-term asset, and for long-term assets, we have to do index cost of acquisition. So cost of acquisition is given. This is 2019-20, and this is 2002-2003. So for this, we require this data. So 2001-2002, it is 100. 2002-2003, it is 105. And 2019-2020, it is 209, 289. So this data is very, very important data, without which you will not be able to solve the problem. So you you will be furnished this data in your examination. You need not worry about these particular set data points. So here, let's solve the problem. So cost of acquisition, आपने ये बिल्डिंग को कब खरीदा था, कितने में खरीदा था? 2 लाख रुपए में. So I put 2 lakh rupees into CII, cost of inflation index of the in which the asset was being sold. तो ये कौन से साल में सेल किया था हम लोगों ने? 2009 2020 में सेल किया था. तो उस ईयर का इन्फ्लेशन इंडेक्स कितना है? तो 2009 2020 का इन्फ्लेशन इंडेक्स है, आई एम जस्ट शोइंग यू, इट इज 289. So 289 इधर डाल दो. by CII of the year in which the asset was acquired. ये asset कब हम लोगों ने परचेस किया था? 2001 2002 नहीं, 2002 2003 में परचेस किया था, एंड और 2001 2002 whichever is later, बोले तो जो बाद में आता है. So 2002 2003, तो 2002 2003 का इन्फ्लेशन कितना है? So 2002 2003 का इन्फ्लेशन है 105. तो उधर 105 डाल दो. So here we will insert 105. So this is the way you are going to find out the index cost of acquisition. So very, very simple. If you know the concept, there is no big deal in solving the problem. But if you don't know the problem, the basic concepts, you will be in big trouble. So indexation will be done. Indexation will be done. Please remember, I am using this particular point. Indexation will be for long-term capital assets only. For long-term capital assets only, and not for short-term capital assets. Indexation कब करना है? Indexation बोले तो ये कब करना है? Only for long-term capital assets and not for short-term capital assets. So this is the way you do the indexation. Hope you have understood this point. Next point. Now calculate 2 lakhs into 289 by 105. It's approximately 5,60,000. Okay, approximately. I have not. I don't remember. I have not calculated. So it's approximately 5,60,000, and it is given in the problem that Mr. X has sold in for 25 lakhs. So this is the sale price, and this is a indexed cost of acquisition, not cost of acquisition, because cost of acquisition was converted to indexed cost of acquisition. Cost of acquisition is 2 lakh rupees. Indexed cost of acquisition is 5,60,000 rupees. So 25 lakhs को बेचा, 5,60,000 में खरीदा था. So the profit is 19,40,000 rupees, which is long-term capital gain. So this is the way indexed cost of acquisition should be done. So the formula is very, very important. You can note this formula. The formula is cost of acquisition into cost of inflation index of the in which the asset is being sold by cost of inflation index of 2001 2002, or cost of inflation index in the year in which the asset was acquired, whichever is later. So this is clear. If I assume it's clear. Okay. The next point. Next one is cost of improvement. Now, cost of improvement, if it is a long term in nature, we have to do index cost of improvement also. Now you can ask me, sir, what do you mean by improvement? What do you mean by improvement? So this is a very, very important word in case of in case of the chapter income from capital gains. Okay. Now, for example, here we have example of Sakshi. Sakshi is the Sakshi's mother has purchased one building constructed. Okay, we'll use the word constructed in the year 2001, 2002. Okay, so ground floor was constructed in the year 2002 for rupees 50 lakhs, for okay 15 lakhs. Now this is the cost of acquisition or construction of the ground floor property. But after 5 years, in the year 2008, her mother constructed the first floor भी construction किया है, first floor कब किया, 2008 में, after 6 years, and the cost incurred is 30 lakhs. So what has happened? This is the cost of acquisition and this is the cost of improvement. Improve किया ना, एक नया बिल्डिंग को खड़ा किया on the ground floor, which is first floor. Now subsequently in the year 2015, again she constructed one more floor, that is constructed second floor in the year 2015, and for which she spent some 45 lakh rupees. So there are two improvements. One is this improvement and this is another improvement. Okay. And in the year 2018, again her mother constructed a third floor construction किया, उसके ऊपर 50 लाख का खर्चा हुआ. Okay, now the whole building is now ground floor, first floor, second floor, and third floor, and this is the amounts which were spent. These were the amounts which were spent. And in 1920, Sakshi's mother sold it for 5 crores. 5 crores. So in this case, indexation has to be done because it is a long-term capital asset, because it was in 2002, 2008, 2015, 2016. So indexation has to be done for ground floor, for the improvement 1, for the improvement 2, and for the improvement 3. Improvement 3. Okay, now let's do a small problem and we will find out how to do cost of improvement. Cost of improvement and indexed cost of improvement. Let's take a small example. And it's very, very important because normally we don't have only ground floor, we have even first floor and second floor. Okay, let's talk about the problem of how to find out cost of improvement. X has sold a house property for in the year 2019-2020 for rupees 50 lakhs. Sold, a sale value or transferred. Number 2, X purchased the X constructed the ground floor in 2005-2006, and he has incurred a cost of some 1 lakh rupees. Number 2, X constructed the first floor in the year 2012-2013, and he spent rupees 5 lakhs. Okay, so this whole building was sold in 2019-2020. Now with this given data, you have to find out what is the long-term capital gain which was earned by the assessee. So I am summarizing the problem. X sold the house property in 1920, and you know the cost of inflation index of the year of 2019-20 is 289. So need not worry, every time it will be 2089. Now first floor was constructed in 2005-2006 for rupees 1 lakh. So this is sold in 2019-20. So how many years? 14 years. So it is a long-term capital asset, and we have to do indexation. Now first floor was constructed in the year 2012. 2012, 2013, and it was sold in 2009, 2020. So this is after 7 years. So this is also long-term capital asset, and indexation has to be done. Now this indexation of 2005, 2006 is called as cost of index cost of acquisition or purchase, whereas this one is not index cost of acquisition. This is improvement, index cost of improvement, index cost of improvement. So let's do the index cost of improvement. So index cost of improvement, the formula is there in front of you. So cost of improvement, how much was the cost incurred for improving the house? It was 5 lakh rupees. It was 5 lakh rupees. So 5 lakh rupees into cost of inflation index in the year in which the asset was sold. This whole building was sold in the year 2019-20, whose CII is 289. Already we spoke about this. Number two. Number three is number three is number three is CII of the year in which the improvement was incurred. ये जो इम्प्रूवमेंट है कौन से साल में हुआ था? ये जो इम्प्रूवमेंट हुआ था 2012 में हुआ था, 13 में हुआ था, उसका कॉस्ट ऑफ इन्फ्लेशन इंडेक्स लेना है. सो यू हैव टू गो बैक टू कॉस्ट ऑफ इन्फ्लेशन इंडेक्स ऑफ 2012 2013. सो दिस इज 2012 2013 का CII. So here it is 200. So divide by 200. Divide by 200. So if you calculate, you will be getting around 6 lakhs, sorry, 2.8, 1.4, 7 lakh rupees you will get. So this is index cost of improvement. आपने खर्चा किया था 5 लाख, उसका इंडेक्सेशन किया तो 7 लाख हो गया. So hope you have understood index cost of acquisition and you have understood index cost of improvement. So this is clear. Now the same particular table, I have put it in a different format. Okay, so 2001, 2002, 2002, 2003, 2004, 2005, all this stuff is given to you. So here we have 2019-20, we can add 289 and so on and so forth. Now this also we have discussed, so we will not go into it. This is again another format in which I have put the stuff. Now no indexation. The concept of the indexation is not there in case of certain long-term capital assets. So we will not discuss about this. So this is the format for short-term capital gain. Now this format, okay, this format which I showed. If you remember, this is the format. This is the format which I showed. This is for long-term capital asset. Whenever there is a long-term capital asset, this is the format to be followed to find out the long-term capital asset, and the difference between short-term capital asset and long-term capital asset format is this is the difference. For long-term capital asset, we have to do indexation, that is index cost of acquisition and index cost of improvement. Now, when I am talking about short-term capital asset, now this is the short-term capital gain, and the format for finding out short-term capital gain is as follows. So for short-term capital gain, the same format is used. Sale consideration less expenses on transfer. We will do some problems, don't worry, and net sale consideration. But there it was indexed cost of acquisition, but here we don't have indexed cost of acquisition, just cost of acquisition and cost of improvement. And we have to see whether we will get these exemptions or not. Now let's take a small problem. Let's take a small problem, and this format is going to be, in this format we are going to solve the problem as far as finding out of short-term capital gain is concerned. So you can expect in the examination a problem on short-term capital gain as well as long-term capital gain. Let's solve the problem. Mr. Ramesh Kumar Mehta purchased a silver bracelet on 1/9/2019. So in the current year, financial year 2019-20, he purchased a bracelet for 1,20,000. एक bracelet खरीदा 1,20,000 में. On 1/2, that is 1st February 2020, उस bracelet के ऊपर उन्होंने कुछ diamonds लगाया, and the cost of the diamonds are 2,25,000. So bracelet is there, on this bracelet, some diamonds were Sven for and the cost of these diamonds is 2,25,000 rupees. So total value of this uh, particular bracelet, including diamonds, is 1,20,000 plus 2,25,000. It's 3,45,000. Now what he has done, now on 1st March 2020, he sold the bracelet along with the diamonds for rupees 6 lakhs, and the cost incurred for selling this particular bracelet towards brokerage charges is 15,000 rupees. Now we have to find out what type of asset it is and what type of capital gain it is, and you have to find out the gain. So first and foremost, if you look, he has purchased this asset is in the year 2019-20, and he has sold the same in the same next month. 3-4 months later, he has sold. So 1/9/2019 is the cost price, purchase price date, and another date is 1/2/2020, and he sold this one on 1 March 2020. So how many months? Hardly there are 6 months. So the assets are sold within 6 months. Within 6 months. So this is a case of long term, not a long term capital asset. This is a case of short term capital asset. This is a case of short term capital asset, because the asset is sold less than 12 months, 36 months. 36 months. So it is a short term capital asset. So short term capital asset, there is no question of indexation. We should not do any indexation. Please remember that. We have to not perform any indexation. So if I am not performing indexation, what will happen, and how is the short term capital gain calculated? So the format. तो उन्होंने कितने में बेचा? 6 lakh rupees is the transfer price, or transfer or sale consideration. He has sold it for 6 lakh rupees, and while selling there were some expenditures to the tune of 15,000 rupees to the broker, and he paid out of this 6 lakh rupees 15,000 rupees. So the net sale consideration, बोले तो बेचा तो कितना पैसा आया? He got this much amount of money. So this was the selling price, you can assume. Now there is a cost price. Cost price is cost of acquisition and cost of improvement. The cost of improvement is 2,25,000 rupees, and the cost of acquisition is 1,20,000 rupees. So the total cost is 3,45,000 rupees. So 5,85,000 minus 3,45,000 is equal to 3,40,000, which is short-term capital gain, and no indexation, because in case of short-term capital asset we should not do indexation. So simple formula for finding out short-term capital gain is selling price minus cost price. That's it. Hope you have understood this. So the format for long-term capital gain, already we have discussed about that. Sale consideration less expenses on transfer will give you the net sale consideration, and then you have to do index cost of acquisition and index cost of improvement. From that you will, from this you will remove or deduct this one, you will get this, sorry, and this is long term capital gain. And from long term capital gain you are getting some assumptions under section 54B, 54D and 54G, and you can remove that one also to the amount, to the extent of amount you have invested, and the long term capital gain will be this much. Now this is the formula of index cost of acquisition. Already I told about this, so I'm just repeating this. This is the formula for index cost of improvement. Also we have discussed about this. So this is the cost of inflation index of the previous years. Okay, this is very important. Let's take a small problem. Okay, let's talk about this one. This particular point. This particular point is very important. This point you can note Any cost of improvement, this is very, very important. Any cost of improvement incurred by the assessee or the previous year, previous owner before 1/4/2001 shall not be considered. Very important point, it should be ignored. Ignored. Any improvement by the assessee to the asset or by the previous owner to the asset, and these improvements are taking place before 1/4/2001 should be ignored. For example, first floor is constructed in on 1/9/2000 1/9/1997, and the cost incurred is 5 lakh rupees. So this should not be considered, this should be ignored, and index cost of improvement or improvement cost of improvement for calculating of short-term capital gain should not be considered. Just to remember one particular point, that cost of improvement, if at all, if it is taken place before 1/4/2001, ignore it and ignore it. Simple understanding. Any cost of improvement which has incurred before 1/4/2001, ignore it, whether it is by the previous owner or by the assessee. Just if it is given in the problem, don't look at that, because it will be converted into market price or fair market value of that particular asset on 1/4/2001. So hope you have understood it. Now, cost of acquisition, treatment of assets acquired before 1/4/1991, 1/4/2001, sorry. If already we have discussed, but let's explain some more points under this. If any asset is acquired before 1/4/2001, this particular date, because this is the date from where indexation has index cost of inflation index has come into picture. So if any asset is acquired before 1/4/2001, then its cost of acquisition shall be higher of the two. Already we have done cost of acquisition, ignoring cost of improvement incurred before 1/4/2001, and or fair market value of the asset on 1/4/2001, whichever is higher is to be taken as cost of acquisition. So this is also over. Where the asset is acquired before 1/4/2001, the indexation benefit shall be available from the year 2001. Now, what is fair market value? Fair market value on 1/4/2001. What do you mean by fair market value? Very important concept. What do you mean by fair market value? Fair market value means the price the asset would ordinarily fetch on sale in the open market on the relevant date, and where such price is not ascertainable. The price may be determined in accordance with the rules under Income Tax Act. So let's do a small problem, and I hope that will be very that will make your life very happy. So let's do a problem on long-term capital gain. Let's do a problem on long-term capital gain, and you can expect this question in your examination also. Let's do the problem. Mr. S. Ramesh Kumar Mehta on 28th October 2019 sold a diamond for consideration of 2 lakhs 26 lakh 50,000. बोले तो he has sold this diamond which he has purchased some time back on 28th October 2019 for 26 lakh 50,000. So this particular diamond was sold on this particular date for 26 lakhs 50,000. Number 1 point. So sale consideration you got. Next one, he bought this. Abhi, the information related to acquisition is given. So he bought this diamond for 3 lakh rupees on 28th August 2000. तो 2000 में इन्होंने खरीदा था 3 लाख रुपीस में. So this asset was purchased on or before 1/4/2001, because if you look here, if you look and compare here, the asset was not purchased on or after 1/4/2001, but it was purchased before this particular date, which was 1/4/2001. Before this date it was purchased. So you have to take this figure or fair market value. Now the fair market value is given. The fair market value is given as 4.5 lakh rupees on 1/4/2001. 1/4/2001. So this 3 lakh rupees or 4.5 lakh rupees, whichever is higher, that is the that is the cost of acquisition. That is the cost of acquisition. So the cost of acquisition is 4.5 lakhs. Cost of acquisition is 4.5 lakhs. So cost of acquisition is 4.5 lakhs. Now we have to find out index cost of acquisition, because this is a long-term capital asset, because it was purchased in the year 2000 and it was sold in the year 2019. So it is 19 years old 19 years old asset which was sold after 19 years. So more than 36 years. It is a long-term capital asset, and for a long-term capital asset we have to do index cost of acquisition and index cost of improvement. So index cost of acquisition is equal to cost of acquisition. Already I told this formula. Cost of acquisition into CII of 2000 of the year of transfer by CII of the year of acquisition, or fair market or CII year of 2001, 2002, 2001, 2002. So that is 4.5 lakhs into 289 by 100. So this is the answer you will get, and it is 13 lakhs 500 rupees. Index cost of acquisition is 13 lakhs 500 rupees. So if you remove this 13 lakhs 500 rupees from the sales price, that is the net selling price, you will get a long-term capital gain of 13 lakh 49,500, and you have to pay tax on this one to the tune of 20%, which is long-term capital gain tax, and roughly around it is 2 lakh 70,000 rupees. So you have to pay a tax of 2 lakh 70,000 rupees, because you have made a long-term capital gain of आपने गेन इतना कमाया, तो आपको इसके ऊपर इतना टैक्स पे करना पड़ेगा. Hope you have understood this particular point. I am going to explain this problem once again. Please pay attention and pay your concentration on this. Show your concentration on this. So again, I am repeating. Asset was sold in 2019, 1920, sorry, for 26 lakh 50,000. So this point is over. Next one. When did he purchase? This diamond was purchased in on 28th August 2000. This is before 149 2001. This particular asset was purchased before 1/4/2001, and whenever you are purchasing this asset, any asset before 1/4/2001, then in such a case index cost of acquisition is equal to, as this is a long term, we have to do, this is a long term capital asset because it was purchased in 2000 and it was sold after 19 years, so it is a long term capital asset. So we have to do cost of index cost of acquisition. So index cost of acquisition is equal to cost of acquisition into CII, that is cost of inflation index of the year of transfer of the asset by CII, or as on CII of 2001 2002. So if you adopt this formula and insert the values, 4.5 lakhs into 289 by 100 is equal to 13 lakhs. From 26 lakh 50,000, you remove 13 lakhs, you will get 13 lakh 49,500. So this is the answer. So on this 13 lakh 49,500, which is the long-term capital gain, you have to pay 20% tax, which is roughly around 2 lakh 70,000. Hope you have understood this. And the most important note of the problem is, this is the most important part of the problem. The note of the problem is, if any asset is acquired before 1/4/2001, then the cost of acquisition will be higher of cost of acquisition or fair market value on 1/4/2001. So the cost of acquisition was 3 lakh rupees, and the fair market value in this particular problem is 4.5 lakh rupees. So among them, whichever is higher is 4.5 lakh rupees. That is the cost of acquisition. So this is the second time I have repeated the answer to the problem. Hope you have understood it. Next one. This is I will give you some 2-3 examples, and then we will understand the concept. Now, deemed or notional cost of acquisition. Okay. cost of acquisition of the previous owner shall be the deemed cost of acquisition for the assessee. So this is a very important concept in capital under the chapter capital gains, and the concept is deemed or notional cost of acquisition. Notional cost of acquisition. For example, Sakshi is there. Sakshi, mother has Sakshi's mother. Sakshi mother has purchased from an asset on 1/4 1992, which is 2 lakh rupees, for example, and she gifted this. I will take the example of 2002. Okay, तो साक्षी की मदर ने एक गोल्ड खरीदा था 2 लाख रुपीस में 1/4 2002. Now Sakshi's mother is gifting this gold to Sakshi some 10 years later, and Sakshi has got that gold. Now what is the cost of acquisition by Sakshi? साक्षी ने अक्वायर किया है क्या, परचेस किया है क्या? नहीं परचेस किया है. सो उन्होंने तो परचेस नहीं किया, लेकिन उनके मदर ने परचेस किया था. So whatever mother has purchased, whatever is the cost incurred for mother to purchase this particular asset will be the cost of acquisition, in the hands of Sakshi, or Sakshi has purchased. Sakshi's purchase value will be the same as that of what mother has purchased. So these all are the cases where whatever is the cost to the previous owner will be considered in the hands of the assessee. Now let's take a small example to understand understand the concept of period of holding. Period of holding. कितने दिनों के लिए assets को hold किया था before it is sold? Because period of holding will tell whether it is a long-term capital asset or a short-term capital asset. And if it is a long-term capital asset, there is a taxation to the tune of 20%. Whereas in case of short-term capital asset, taxation will be 15% on the gain, if at all, if it is there. So we have to find out the period of holding. How many days it has been held? The asset has been held before it has been sold. Okay. The period of holding of the previous owner shall be considered for classifying the asset into long term or short term. So in this case, I will give you a small example that will be helpful in identifying the answer to the period of holding in the hands of the assessee. And we will subsequently find out whether it is a short-term capital asset or a long-term capital asset. Now there is a problem in front of us. Let's take the problem. The problem is like this. The problem is, yes, Ramesh Kumar Mehta gifted to his wife Vijayashree Mehta his house on 1/5/2019. So Mr. Mehta has gifted to Mrs. Mehta his house property on 1/5/2019. Okay. Now Mrs. Vijayashree Mehta, and this particular house was purchased by Ramesh Mehta on 1/2/2016. तो रमेश मेहता ने कब परचेस किया था? 1/2/2006 में परचेस किया था. 1/2/2006 में परचेस किया था. He gifted to his wife this house property on which date? 1/5/2019 to Vijayashree Mehta. And Vijayashree Mehta has sold to this house property to Sachin Kumbar on 1/2/2020. Okay, very important now. Now tell me whether it is a long-term capital asset or a short-term capital asset. Number one. Number two. Now what is the holding period in the hands of Vijayashree Mehta, because she is the assessee, who is the person who is selling this asset. So for this purpose, what you have to do, this concept is used. The period of holding is period of holding of the previous owner shall be considered. So who is the previous owner? Ramesh Kumar Mehta. So from this date to this date will be considered for identifying whether it is a long-term capital asset or a short-term capital asset, and not from 2019 to 2020, where she has acquired on 1/5/2019 and sold it on 1/2/2020. If it is this, if you have considered, then it is wrong, because this is a short-term capital asset. But the answer, it is a long-term capital asset, because the previous year's owners holding also should be considered. So प्रीवियस ओनर ने कब acquire किया था, it is on 1/1/2006, so that should be considered to this date. So here answer is the here answer is the holding period is from 1/2/2006 to 1/2/2020, and not from this date, and not from this date 1/5/2019. So it is from 1/2/2006 to 1/2/2020, and this is a long term capital asset. Now, cost of improvement, I told you about the cost of improvement. The cost of improvement includes improvement incurred by the previous owner also. For example, you have to take this also into account. Whatever are the expenditures incurred for improvement by the previous owner also has to be indexed in case of a long-term capital asset. In case of a short-term capital asset, you need not do indexation. Indexation benefit shall be available from the year when the current owner first held the property. This is very, 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 very important. This is very important. You can just mug up, you can buy heart. It's very, very important. This point is very important. So this particular information tells that indexation shall be available from the year when the current owner first held the property. For example, in this case, Mrs. Mehta has held this property first time on 1/5/2019. So indexation, when you're doing indexation, it has to be done for the year 2019-2020. So we'll look into some problems. So now we are launching ourselves into a big problem. A numerical problem is now going to be done. Now pay attention. It's very, very complicated. Just look at the solution also. So it's a very big problem. And if you have understood this problem, you have understood the capital gain chapter. So just look for 2 minutes as far as the problem is concerned. And now after you look for 2 minutes, I am going to start solving the problem. And it's very, very important problem. You can expect the problem in your examination. So you can take a snapshot of this particular problem. Now I'm reading the problem. Just pay attention. Mr. N.S. Mehta completed a construction of a ground floor of the building on 1/1/1983 by spending ₹15 lakhs. इन्होंने ground floor बनाया. कब बनाया? 1/1/1983 by spending 15 lakh rupees. So this first point is over. Hope you have understood the first point. Second point, completed construction of the first floor. Now, after the ground floor was constructed in 1983, in 1995, 1st February 1995, this man N.S. Mehta constructed on this ground floor first floor also. And what is the cost incurred? 20 lakh rupees. So till so far, how much cost is incurred? 10 lakhs and 20 lakhs. Number 2. Number 3. As these house properties came into picture before 1/4/2001, you should be furnished with a data called as fair market value of the house property on 1/4/2001 ₹50 lakhs. ये जो बिल्डिंग है ना, ग्राउंड फ्लोर और फर्स्ट फ्लोर, इसका फेयर मार्केट वैल्यू फाइंड आउट किया कि अगर इसको बेचने के जाएंगे या कोई खरीदेगा तो उसका फेयर मार्केट वैल्यू कितना रहेगा as on 1/4/2001. So the fair market value done was 20 lakh rupees. So 15 lakhs plus 30 lakhs was the 35 lakhs, but the fair market value was more than the cost of construction of 35 lakhs, which is 50 lakh rupees. Now this is number 3. Number 4, very important. अभी इधर सिलसिला रुका नहीं है. He then took up the construction of the second floor. Sorry. So there was first floor, ground floor, and now he has constructed a third floor. Who? N.S. Mehta. He then took up the construction of the second house floor and completed the second floor on 1/1/2005. कौन सा year आएगा ये? 2004-2005. So you should do indexation. Indexation, because if there is an improvement and the improvement even it is done by the previous owner, it has to be indexed, and that is indexed cost of improvement. Okay, hope you have understood this point. So cost of construction of the second floor for Mr. NS Mehta is 30 lakhs. So this is the fourth point. Now fifth point, fair market value of the house property on 1/4/2005, 1/4/2005 is 75 lakhs. I am just giving you a thumb rule. The thumb rule is, if any fair market value of any date is given apart from 1/4/2001, 1/4/2001, you have to take into consideration any other fair market values of the house properties or assets should be ignored. Ignored and ignored. Just ignore it. You should not keep in your mind any fair market value of any dates except 1/4/2001 should not be considered. So this is irrelevant for us, because indexation started in the year 2001, 2002. So this is not required. So there will be attempt by the question setter, the person who is setting the question paper, to develop confusion in your mind by giving this kind of information. So you should not succumb to these confusions. You just ignore fair market values of any dates except 1/4/2001. So this fifth point is also over. अभी क्या क्या आए? ग्राउंड फ्लोर आया, फर्स्ट फ्लोर आया, सेकंड फ्लोर आया. Now what has happened subsequently? Subsequently, Mr. NS Mehta has gifted. He then gifted the same building to S. Ramesh Kumar Mehta on 1/1/2006. So the assessee has come into picture. The assessee got the house property for the first time in the year 2006-2007. Okay, now Mr. S. Ramesh Kumar Mehta took the construction of the third floor of the house property, and he completed the construction of the house property on 1/1/2008. 1/2/2008. That is in the year 2007-2008. Hope you understood this. And the cost of construction of the third floor is 50 lakh rupees in the hands of S. Ramesh Kumar Mehta. So till this point also is over. The fair market value on 1/4/2008 is of the house property, which is of ground floor, first floor, second floor, and third floor, is 150 lakhs. So what should you do? You should ignore it, because I told you just now, any fair market values apart from 1/4/2001 have to be disregarded, has to be discarded, has to be ignored. So just ignore it. Don't mind it. Next one, last one. Mr. S. Ramesh Kumar Mehta sold his house property on 1/2/2020, that is in the year 2019-2020, for a consideration of 4 crores, sorry, 4 crores. And when he was selling this, he sold this house property to X and Y, X person. And when he was selling this house property, there was a broker was appointed, and the broker charged some 1% on the sale value, which is 4 crores. Now, this is a very complicated problem, and you can do the problem only on the condition that you know the rules, number one. Number two, when you know the cost of inflation index of so many financial years. So the question asked you is, find out the capital gains in the hands of Mr. S. Ramesh Kumar Mehta. So hope you have understood the problem. Hope the problem is clear to all of you who are there in the class. Now let's solve the problem. Let's solve the problem. Now the problem is like this. So sale consideration is 40 lakh rupees or 4 crores. So उन्होंने 4 crores में बेचा. कौन? रमेश कुमार मेहता ने 4 crores. Number one. Number two is expenses on transfer. Now when he is selling this particular asset, he has incurred 1% on 4 crores, which is 4 lakh rupees. Hope you have understood this point. Number 2 point. So after you deduct from 4 crores, this 4 lakh rupees, the net sale consideration is 3 crores 96 lakh rupees. 3 crores 96 lakh rupees. So this point, up to this stage, I don't think there will be any problem. But the problem starts here onwards. First, you have to do index cost of acquisition. Second, you have to do index cost of second improvement, index cost of third improvement. Now, why you have to do index cost of second improvement? and third improvement, and you should not do first floor improvement. Why you should not do first floor any improvement index cost of acquisition? Because any, I told you, just remember this rule, any improvement which has taken place before this date should not be taken into consideration, because this value of 20 lakh rupees and this value of 15 lakh rupees which are incurred before 1/4/2001 are included in the fair market value, included in the fair market value. Hope you have understood it. So any expenditure which are incurred before 1/4/2001 have to be disregarded, and it is to be regarded only for finding out the cost of acquisition and fair market value, whichever is higher. So in this case, the total expenditure is 35 lakh rupees, but the fair market value is 50 lakh rupees. So among them, whichever is highest has to be taken into account. Whichever is higher is taken into account. So 50 lakh rupees is the cost of acquisition, is the cost of acquisition in the hands of Mr. Ramesh Kumar Mehta. So cost of acquisition is 50 lakh rupees. 50 lakh rupees. Hope you have understood this point. Into, now I told you the formula. I will again tell you the formula for index cost of acquisition. You just remember this one, very, very important. This is the 20th or 21st time I'm telling. Index cost of acquisition, the formula is, in this case, okay, cost of acquisition, in this case I'm talking about, in index cost of acquisition into CII, that is cost of inflation index of the year of transfer of asset by CII of the year in which the asset was first acquired by the assessee, in which the assessee acquired the asset for the first time. For the first time. So assessee acquired this house property for the first time in which year? If you look here, this is the first time he acquired, the assessee acquired the first time in the year 2005, 2006. If you look at this, it is for the first time acquired by Mr. Ramesh Kumar Mehta from Mr. N.S. Mehta, his father, on in the year financial year 2005, 2006. So 2005, 2006, the inflation index is 122. You can refer to the inflation index. So inflation index I'm showing you because I can't index. So 2005, 2006. 2005 2006 it is sorry, 2006 2007 it is 122, and 2005 2006 it is 117. So I hope I have taken 117 only. Okay, so look here. Okay, it is okay, just a moment. Index cost of acquisition is to एक minute, just a moment. So the first time in which it has acquired is 2005 2006. So whatever is the for indexation, I told you the formula. For indexation, I told you the formula. The indexation in case of just a moment. This is the formula for indexation. Indexation benefits shall be available from the year when the current owner first held the property. Indexation benefits shall be available from the year when the current owner first held the property. Okay. In this case, Mr. Ramesh Kumar Mehta first hold the property in the year 2005, 2006. Okay. So you have to take 2005, 2006. So there is a minor error here. So that error we will rectify it. So the error is this is to be replaced by 117. And if you do, you will get some calculations of this kind. Okay. Next one is second floor. Now this Ramesh Kumar Mehta is even constructing the second floor also. No, his father, N.S. Mehta. I told you, if any improvements are done by the previous owner before 1/4/2001, that has to be considered. That has to be, yes, that has to be considered. That has to be considered. Now I will just replace this one. Okay, this by 2007. The year in which it was gifted was 2001, 2007. That is, it will fall in the year 2006, 2007, and for 2006, 2007, the cost of inflation index is 122. So with this assumption, a slight modification, I have taken up the problem. Now, any improvements which are done by the previous owner before 1/4/2001 have to be taken into account. So in this case, Mr. N.S. Mehta, who was the previous owner, did second floor, constructed the second floor on 1/2/2005. That is in the year 2004-2005, and 2004-2005, hoping the index is 117. So he spent 30 lakh rupees on the second floor rupees on 30 lakhs on second floor. So 30 lakhs into the year in which it is transferred is 289. Cost of inflation index in the year in which it has been transferred is 289 by 117. That is the cost of inflation index of 2004-2005. Last one is cost of inflation index of the you have to even do index cost of improvement of the third floor. So any improvement which is taken after 1/4/2001 either by the previous owner or both ought to be considered. Now in this case, Ramesh Kumar Mehta, what he did, he constructed the the third floor on the house property by spending 50 lakh rupees on 1/2/2008, which is in the year financial year 2007-2008. So, 2007-2008, the indexation is 129. So 50 lakhs, that is the cost of improvement into cost of inflation index of 2000 of the year of transfer is 289, and cost of inflation index of 2004 to 2000, I don't remember, 2006 7 2008 is 129, and once you are calculating, you are getting this much of amount. Now this is the total sale consideration, and these are the expenditure 1, expenditure 2, and expenditure 3, which are indexed. And if you remove all these three amounts from this 3 crores 96 lakhs, your profit, that is long term capital gain, is 91 lakh 43,932. Again, I am explaining the problem. Please pay attention. Please pay attention. This is a very important problem. Or you can see this type of questions in your examination. So I'm summarizing what I have done. सेल कंसिडरेशन, इन्होंने घर को बेचा 4 करोड़ में, और घर को बेचते वक्त जो ब्रोकर को दिया 4 लाख, तो हाथ में कितना आया? 3 करोड़ 96 लाख. तो एंजॉय कर रहा है. दिस इज एंजॉयमेंट. 3 crores 96 lakhs is the big amount he got. 3 crores 96 lakhs is the big amount he got. But this is not got without any expenditure. There are so many expenditures. One is the improvement which has taken place to the second by the means of second floor, the improvement which has taken place to the third floor, and the cost of acquisition. So let's talk about cost of acquisition. Let's talk about the cost of acquisition. The cost of acquisition is now very important point. Many of you have joined just now. For them, I will clarify, or you can view my video. This one I'm going to upload today. You can view it also for your understanding. Now, it was the first floor, ground floor, 15 lakh rupees. This is the first floor, 20 lakh rupees. And this ground floor and first floor are constructed before 1/4/2001. So any thing of this kind which is 1/4/2001 has to be compared with the fair market value of 1/4/2001. So 1/4/2001, the fair market value is 50 lakh rupees. And the cost incurred before 1/4/2001 was 10 lakhs and 15 lakhs. 10 lakhs and 15 lakhs. So total this one. I'm repeating once again. I will remove all the annotations. This is very important problem. If you understood this problem, 90% of your queries or doubts or element of confusion is there. It will be eliminated. So I'm repeating once again. Ground floor was constructed 1983 for 15 lakh rupees. And the first floor was constructed on 1/2/1995 for 20 lakh rupees. So this is one part, and this construction, these two constructions have taken place before 1/4/2001. So hence the reason 1/4/2001 fair market value is given, which is 50 lakh rupees. So you have to compare this with this. You have to compare this with this. Whichever is higher should be considered as cost of acquisition. So in this case, 50 lakhs is the cost of acquisition. So that is what I have done here. cost of acquisition is 50 lakh rupees. I, I will tell you once again the formula of index cost of acquisition. Index cost of acquisition is equal to cost of acquisition into inflation index, cost of inflation index of the year of transfer of the asset by, in this particular case, for the first time the asset has held by the assessee was in the year 2006 2007. That is the cost of inflation index. So 50 lakh rupees is the cost of acquisition into the year in which it is this particular asset was sold was 2018 2000, sorry, 2019 2020, and the inflation index is 289. So 5 lakh rupees into 289, sorry, 50 lakh rupees into 289. And in this case, Mr. NS Mehta was the previous owner. He gifted this to Mr. Ramesh Kumar Mehta on 1/1/2007. Okay, you have to change this one. So it is in the year 2006 2007 which he has sold, which he has gifted, not sold. Okay, and the inflation index of this is 122. 122. If you look, I'm going back to the, so look here, 122, 122, 122. If I'm over, okay, next one. So 122 I have taken, and I will get, if I calculate this, 1 crore 18 lakhs 44,262. So this is also clear. Next one is indexed cost of improvement. Any improvement to the floor or the building after 1/4/2001, either by the assessee or by the previous owner, has to be considered. Has to be considered. Has to be considered. Okay, we are considering that one also. So here, this is the second floor which was constructed by his father by spending 30 lakh rupees on 1/1/2006. Okay, this is six. This is six. Okay, so I will find out index cost of improvement. Index cost of improvement of the second floor. So index cost of improvement, the formula is, again I'm telling you, the formula for index cost of acquisition. Similarly, index cost of improvement is equal to cost of improvement into year of transfer by year in which the improvement took place. So what is the cost of improvement? Cost of improvement is 3 lakh rupees, and this building was sold entirely in the year 2019-20, whose inflation index is 289. By 2005 2006, whatever is the cost of inflation index, because this particular improvement took place in the year 2005 2006. So 117. So 30 lakhs into 289 in by 117, you will get 74 lakhs 10,256. Now the assessee has even taken, the assessee has taken up a third floor construction as shown in this particular PPT. In this slide, it is mentioned that the third floor was constructed. Okay, this you can consider as 9/1/2009. So in 2008 2009. So what is the cost of inflation index of 2008 2009? 2008 2009. We will see what is the inflation index. It is 2008 2009. The inflation index is 137. So if it is 129, then we will consider it as 129 only. So it is 129. That is 2007 2008 only we will consider. So 15 lakhs into 289 by 129 is 1 crore 12 lakhs 1,550. 50 lakhs is the cost of improvement into inflation index of the year in which the asset was transferred, that is 289, by 129, that is the financial year in which the improvement took place, cost of inflation index of that year. So you will get 1 crore 12 lakhs 1,550. So there are three costs. You total it. After you total it, you remove this total from 3 crores 96 lakhs. This is the cost price we will consider. So 3 crores 96 lakhs minus this total three amounts, 1 crore 18 lakhs, 74 lakhs, and 12,000. You will get 9 crore, sorry, 91 lakhs, 91 lakhs 43,932 as long-term capital gain, because the asset is sold after 3 years in every stage before they are sold. They are held for more than 3 years or 36 months, and so it is a long-term capital gain. So the summation, the summary of our discussion. The summary of our discussion. The summary of our discussion is very important summary. See, when framing the problem, some dates were taken wrong, and the solution is wrong. But the discussion is very relevant and right. Fair market value as on 1/4/2005 and 1/4/2008, 8 are irrelevant. So I told you any fair market value of any dates except 1/4/2001 are irrelevant. This is relevant and these two are irrelevant. Any fair market value of any dates except 1/4/2001 are going to be discarded or disregarded. So first point. Second point, cost of acquisition shall be taken as cost of acquisition. Cost of acquisition shall be taken as cost of acquisition in the hands of the previous owner or fair market value as on 1/4/2001, whichever is higher. So in this case, the previous owner constructed the ground floor and first floor by spending 35 lakhs, and this amount spent was before 1/4/2001. And we have to, in order to find out the cost of acquisition, we have to find out the fair market value of 1/4/2001, which is 50 lakhs. And among them, whichever is higher, this is 50 lakh rupees, which we have to consider. So our indexation benefit will be available from the year in which the assessee first time acquired the property. So in this case, Mr. N.S. Mehta, whose father is there, has gifted the house property to Mr. Ramesh Kumar Mehta in the year 2006-2007, if I am correct. So indexation, while you are doing, will be done on the basis of 2006-2007, not on the basis of 2001-2002. This is number 2 point. Benefit of indexation in case of cost of improvement incurred by the previous owner shall be available when the actual improvement expenditure was incurred. If any expenditure for improvement has been taken place by the previous owner, have to be considered, and for which indexation has to be done. That is the point. Next one is cost of improvement. If any improvement is taken place, or repairs or expenditure of repairs or so on and so forth are taken place before 1/4/2001, just ignore it. So this is the summary of our problem. So this is in nutshell. Okay, hope this is loud and clear. And in the next session, I am going to take up some more problems to eliminate any iota of doubts or confusion in you or in your mind. So in the next class tomorrow, okay, tomorrow being Sunday, I am going to take the class at the same time, irrespective of whether you join or not. I am going to take the class because the portion is very high and very